Welcome back to the channel. We're going over the Nasdaq 100, the SP 500, and exactly what you need to know going into this week when it comes to trading this market. This is going to be everything you need to know when it comes to trading right now with this crash and how to make money ultimately with this crash as well. If you're not subscribed, I'd recommend doing so right now. I post videos almost every single day about the crash and what is happening. Even when I appear to be wrong, I continue to give you my transparent viewpoint so you know how to trade. Now, everything I'm going to be talking about, we've kind of been covering over the past few days and weeks, but today was kind of the day of reckoning. Now, ignore some of these pivot lines. This is the weekly and monthly levels, but I want to display what's happened basically since open going in. Now, obviously, futures opened up roughly at 11.85 on Nasdaq. You ended up closing at the end of the day today around 11.27, and now you're kind of just pinballing back and forth as we go into the end of the after hours right now. But what I want to highlight is going into something like SPY, and this is where you're really going to see what happened overall here on the chart. So as we saw here, you gapped down from roughly 389 all the way to basically lows of 380, and then you made new lows of around 375. And if you've watched my last video, what I suspected after you broke out of this channel, right? Again, go watch the videos. We've been talking about it. I said if you broke below this channel, this bottom level around 407, you would come down to previous lows, which again, were right here at roughly 380, and you would break them and make new lows. And what has happened within 2 days of breaking that level? 1, 2. You have broken and made new lows. It took you almost 2 weeks to get to this high, and within 2 days, you are down back again at new lows. Now, what is VIX doing? The volatility index. You're pushing back up to 34, 35. This is where it's been every single time we've kind of maximized these drops and hit those key levels. But the thing to know is here is that you are now just getting started. Within 2 days of time, you push back down here, and VIX is back to almost that max level, and things are looking rough. If you start to get above 35, things could get pretty catastrophic for the S&P and for the Nasdaq. Now, something I want to cover before we go any further is going to be the 10-year and 30-year yields. The 10-year yield went absolutely crazy today. And if you watch this, yes, you know we have fully inverted right here, 1.002, you are fully inverted. And if you are new to the channel, what's the significance of this right now? If you go to the weekly time frame, I've kind of highlighted it for everyone so you can see. But every time this has happened, you have had a massive rundown and massive crash on the market. The dot-com bubble and the housing bubble were the biggest ones that you can see here, and it's looking more and more like the dot-com bubble with how this is playing out, because now you are trending in an inverted area. When you come back to the housing bubble, you inverted for literally about a day or so, and then you came back down and never inverted again. You've inverted once, and this is now the second time. Again, the last time this happened was during the dot-com bubble, which led to a major crash. So when it comes to this, what am I looking at? And I want to kind of be transparent with everyone and showing you with what I'm looking at and how I plan to kind of attack this market. Now, personally for me, I only took two trades on the day. Actually, 3, sorry. I took NVIDIA this morning to the downside with the puts, which again, I covered in the last video. And then I also took the Tesla puts as well. Both of those ended up playing out very well. I had an Amazon put, but ended up cutting it because it just wasn't moving enough. So that was about a $50 loss. So all in all, in Discord, we made about 600 for myself personally. Other people made more. When you go over to gains and loss, you can actually see as we come over here, just being transparent, other people posting their gains as well. And then again, the rest of the people just sitting in the live chat as we speak on the after hours talking about it. The link for that is down below. But as I'm looking at this market, I'm just playing the overall trend that we're getting. So when you start breaking your previous lows, chances are you're going to continue back down to that downside. And as we look at Nasdaq, something I'm looking for right now is a touch of the key range back down to roughly 10.9 to 11 flat, which I believe is coming. Now, Jay Ream did call out and say that 11.3 was going to be a nice support, and shout out to him because it has been a relatively strong support on the day. But things you need to know going into tomorrow, you do have the PPI coming out, and this is a broad scale of what's happening with inflation. The difference with CPI and PPI, CPI is what the consumer is paying. PPI is basically what our business is paying for their goods that they're getting from manufacturers. So imagine you are going to Amazon, right? This is going to be how much are the people on Amazon actually getting their products for and then reselling to you. If they're paying more for their products, right, they're going to have to sell those products to you for more as well. So this is going to be the actual inflation side on businesses and not just on consumers. So it's going to give you a very big perspective. Now, overall for tomorrow, so you can see the forecast is 0.0 or 0.8. As long as you come out at 0.8 or below, you're looking pretty good. Last month, you came out as a flat forecast the time before that you beat, which was pretty bad. You do not want this number to be higher than 0.8 because it indicates inflation is growing, and that's something you do not want to see. However, we saw with CPI, it did not go well. But what I will say is on today, you dropped about 4.5% on the Nasdaq and almost 4% on the SPY overall. So looking at that, I do have to look at this and say, chances are you're looking in favor for a bounce. So as I'm going in here, I'm not as heavy on the put side right now, and I actually have no puts overnight right now, just based on how you're moving, and you already just made previous lows. And like I said, 2 days you made those lows. You've dropped almost 40 points on the S&P in under 2 days. That is absolutely crazy when you think about it. So when I'm looking at this here, I'm kind of just waiting at how that data is going to come out, because this is going to give you a direct example of what's going to be said going into that Fed meeting on Wednesday. And if you do not know, we can go to the Fed meeting. This is investing.com. All this information is free. Check it out. I recommend looking over this every week before you even get started. And as you come down to Wednesday, that's where we're going to go look really quick. So as we get down here to Wednesday, you can see this is when the Fed meeting is going to be. You have retail sales, very big. That's going to be the first indicator out of the gates. Crude oil inventories, another big one. But the main one we're watching is around 2 p.m. Eastern, and that's the economic projections and FOMC statement and the interest rate decision. Now, there is a lot of hype behind a potential 75 BPS hike. I want to make it very clear, I do not expect a 75-point hike. So this is what I'm going to address and how I kind of see us moving. Let's just make this very clear out of the gate, because I know people are going to have questions down below. I'm trying to knock these questions out before they even kind of come in. So let's say the potential downside is around to 369, 370, right? So let's say this is hypothetically our target. Now, let's say tomorrow we come out and we get bad data. If we get bad data tomorrow, I fully expect more downside. It might even get grosser down closer to 360. It's hard to say. So let's say these are our two targets. We have 370 and then we have 363. These are our targets. Now, I want to highlight going into this, if we have this immediate downside pulling us down, I am fully expecting going into this rate decision on Wednesday, right? Going into Wednesday, if we come out with a 50 BPS, I am expecting a bounce. So let's say we get a 50 BPS hike right here going into Wednesday. You come down to your zone. In my opinion, you would have to bounce. You would have to start bouncing back up. Now, the question is, do you go to 400? Do you fill all these gaps? I don't know. I can't give you an exact answer there. Now, I would anticipate you do fill this one gap, at least right here, at around 390. And then eventually, if you get strong enough, yeah, you'll probably come back up to 403, 402. But as of right now, this is kind of the near-term gap fill I could see playing out, depending how bearish everyone paints this picture going into Wednesday, because I don't think they're going to get a 75-point hike this week. But I want to play out and address what I think is most likely going to happen going into Wednesday, and I'll cover a little bit more tomorrow as well. So if you're going to get that immediate bounce off of this, but the key thing is going to be is this right here. When you come back here, you got to read what's really happening. The press conference right here. Now, the Fed's going to give their statement overall, but this press conference, they're going to be asked the hard questions about the growing inflation and the growing concerns around our whole economy with everything that's happening, because nothing is really looking good. The only thing that looks kind of positive is oil, and even that was in kind of the gutter today and getting hurt. So looking at this, these questions after you get that rate decision, right? We've seen a lot of volatile pushes up from that rate decision, but going into that press conference, I anticipate there to be a lot of hard questions. So you'll get a relief bounce, but the question is how do they answer those questions, and how do we see the market react to those questions? And so I cannot give you information based on that until we actually get those questions out there, until they start to give you answers. That's why when we read Beige Book, we instantly knew the market was bearish based on the 3 or 4 overall districts saying that they were very concerned about a recession, right? That's how we knew we were going to see downside going into the rest of the month, right? So we have to wait, see what we get, and then break it down and interpret it with how the market's going to move. But right now, let's say PPI is bad, I anticipate downside. If PPI comes out flat or positive whatsoever, you will get a bounce, in my opinion, going into the Fed meeting, because the Fed meeting most likely will be pretty dovish going into the rest of the week, just so you know. I'll be pretty strong on the market. if we get a good PPI, because the Fed's going to paint that as a pretty picture on inflation. So if we get a negative PPI early in the morning right before market opens, I think we come down to 370 pretty quick. Then we start testing 364 to 363 in a hurry. Then we get that BPS hike on Wednesday, and we'll probably get a little bit of a bounce, and we'll have to wait to see how we react from those questions as well. Now I'm trying to paint this as easily for you as possible. Now I'm going to go over a few stocks that I'm liking on the charts right now. Now we talked about Tesla. Tesla's, it's been our baby. It's been what's been making us our money. Congratulations there. Before I leave you here, I want to say right now, I do fully anticipate these lows to be tested on Tesla around 630 to 622. Highly anticipate it. Most likely get tested tomorrow if we come out bearish whatsoever. But I just got to stick this here. I have no position on Tesla. And right now, this downside right here just is not worth it. So trading it from around 645 to 622, it's not worth the risk here, right? You've had all this downside, and I'm not trying to just make and scrape by and make this last a little bit. Right there, it's not worth it. If we start breaking below these lows, so if we start breaking the low that we have right here, then we'll play it down further, down to 560, 540, because that's the position we're trying to look at right there. So that's one thing with Tesla. Now, the next I'm going to go to is going to be NVIDIA. We look at something like NVIDIA. This is something we traded today. J Ream is still in those positions, and we started getting in right when it broke below the weekly here. You came down very quickly to 156. Going back to this, most of these stocks are testing their previous lows that they had back in May, and you're seeing these all come in. As you break below these, so if you start to really break below these, you're going to get into some price discovery of pushing back down. 152, 149, these can start coming in a big hurry. So really it's going to be finding the stocks that you like and that you're used to trading. Something like Apple already broke below those May lows. That's something you need to be looking at. You've already came all the way down to 131, and this is one of the biggest movers when it comes to the S&P. So this is why I'm so bearish as we're looking at the market right now, but I also have to recognize that we've gotten a lot of chop, and I have to recognize that we're getting a lot of nasty wicks on the market. So I'm not trying to overcompensate or stay in these too long, but when you're looking at these breaking these previous lows, you have to anticipate further and further downside, and that's where the concern comes in for me. So what I'm looking for here is I'm not looking at Apple, I'm not looking at NVIDIA. These are the ones that I've been trading. I'm kind of looking at some of these other ones. One I'm really liking is going to be Baba. This is one of my favorite plays right now. Now, looking at Chinese tech, you've had crazy run-ups because of their overall growth and their projections. But guess what? The market's being pushed down right now. You're seeing tech getting hurt. That's why I'm looking at these Chinese tech right now for the most potential to downside. If you're looking back at the previous lows that you've had here on the year, you're looking all the way back down to $77 right there. You can come out a little bit further, and then you can look at that 74 touch that you had back down here as well. So we're going to grab that really quick, and you're going to grab that right there. So overall, looking at these targets, you have plenty of downside, but ultimately you're looking to just break below that monthly level right here. I like 98 going down to 95 and then 90. You can even get data positions and try to catch this move all the way back down. I do think Chinese tech is going to hurt. You're already seeing some of these EVs that were performing very good getting smashed as well. So Baba, YY, those are all interesting ones. Pinduoduo, these are all going to be exciting plays for more potential downside. You've seen these types of moves before with Chinese tech, but that's just something I want to highlight for everyone here as well. Now, going into oil, I do want to say this just for a second. I'm going to go over Bitcoin really quick as well. Oil is trying to hold 120 a barrel, so this is definitely the most interesting play that there is out there. If I'm looking at this, I like something like Oxy, but overall, you have been hit pretty tough, and you're going to get hit tough when the market does come down, but I do expect some rebounding coming in here after the OPEC data comes out tomorrow as well. So that's a very big area. We mentioned Bitcoin the other day, and if you watched that video, then you saw where we were at. You were right here at roughly 28 to 27. And I was a bear. I said this thing is getting ready to absolutely crumble, and look what's happening. You're getting absolutely slaughtered to that downside push. Now, there was a rumor going out that Michael Saylor would be liquidated or margin called on his Bitcoin position if he hit 21K. He then tweeted out that that's not true. You'd have to hit 3,500. I don't really know what's the truth there. So all eyes on me for like 21K because I want to see what happens if you hit that level. And I do think there's a high possibility you're coming down to 20K flat on Bitcoin just because you've basically dropped $10,000 on Bitcoin in under 3 days as well. So that's what I'm looking at here. I see massive downside on the market, but I'm playing it pretty conservative when we come to this as well. In Discord, I'll be giving you updates all day. And as we're looking at this market, hopefully finding the best trades possible. Have a good one, traders.